So we've talked a lot about Meta today with Zuckerberg's testimony, but the company is making a massive investment into AI, plans to spend tens of billions on a range of chips. It's expected to spend, as a matter of fact, over $135 billion on its AI ambitions this year. So with that, Doug Flynn joins us from Flynn Zito Capital Management. So like I said, Zuckerberg's in the news for the social media addiction trial, but this Meta spending all this money, it's kind of interesting, buying chips from Nvidia. At least at first when I saw it, it's like both stocks went up, which is interesting on a deal like this. So there's excitement around it, I suppose. What does it mean?
Yeah, I mean, they've announced, and other companies have too, that they're going to build their own chips. But what this is telling you is that there's still a lot of demand for AI chips, and Nvidia is the poster child for that. This is really for their U.S. data center, so that's what this is really for. I find it really interesting from this perspective. Meta really strategically did two things here. They kind of accomplished a supply chain move by locking down these next generation chips. These are not the current Blackwell ones. Those are hard to get. These are the next gen chips. And it's also a strategy move, because what they did is they put themselves first in line to get these. So they've kind of locked in next gen ahead of everybody else. And so that's a interesting move. And you're starting to see now, instead of just everything happening the same way, companies are starting to pivot and do things slightly different in the AI space. But the winner is not only obviously Meta here, but Nvidia as well. I think you see that here.
Yeah, that was interesting. Speaking of companies doing it differently and stock prices being looked at differently, put up a chart up from the tablet that I have in front of me that shows Apple. But the headline at the top, Apple decouples from tech peers amid AI upheaval. Okay. There's some people out there saying that Apple and its stock is kind of the anti-AI play right now. What do you say?
Apple was always that big tech company, but it has done things differently. We were talking for the longest time about how they really were behind the 8 ball in AI.
Right.
And so, you know, it just as an example, how it's decoupling is the fact that, like, last month, Microsoft was down 12% and Google was down 6%, and Apple was up 7%. And it used to correlate much more like the NASDAQ 100. Now it is the lowest correlation it's had in 20 years. And so when you take a step back, you realize that Apple's not doing AI. They're just doing it very differently. Rather than just this whole like Olympic race to build, you know, data centers, they're doing, hey, let's put it inside the phone. Let's partner with other companies rather than have to spend tens or hundreds of billions of dollars of capital expenditures. That's CapEx in the industry. They're going to do it differently. Now, that's a gamble. Maybe it'll pay off really huge for them, or maybe it won't. But they're definitely deciding to go a different way that everybody else is going. And that's what you're seeing. And that's why it's not correlated and not just following along with every other AI stock.
They've had success in the past doing things like that. Okay, that's the business today. Again, the big news story on some of these companies, the social media addiction trial, which we're also covering. Thank you, Doug. Doug Flynn on that.